Good morning. My name is Rupa Nampally, Realtor with Remax 1. First, let me thank all the first responders who have helped and sacrificed their lives on 9/11 while rescuing people from the World Trade Center attacks, and my heart goes out to families who have lost their loved ones. In today's episode, I will shed some light on the mortgage rates, the market sentiment, and when will the inventory and bidding wars end. Hope you will stick around to watch the full episode and also click the subscribe button. In what could be a preview of what's in store if mortgage rates continue to rise, demand for purchase loan remains subdued compared to a year ago as rates on 30-year fixed rate loans continue to hover above 3%. The Mortgage Bankers Association's weekly mortgage application survey for the week ending September 3rd showed demand for purchase loan was down seasonally adjusted 0.2% from the week before. Compared to a year ago, demand for purchase loans was down 18%. MBA Chief Economist Mike Frantoni said in a statement, mortgage application volume fell last week to its lowest level since mid-July as mortgage rates have stayed just above 3% for several weeks. Refinance volume has been moderating while purchase volume continues to be lower than expected given the lack of homes on the market. The net share of Americans who think it's a good time to buy a home increased to 38% in August compared to 35% in August 2020. Fannie Mae Deputy Chief Economist Mark Pillam said in a statement, most consumers continue to report that it's a good time to sell a home but a bad time to buy, and they most frequently cite high home prices and lack of supplies as their primary rationale. However, the good time to buy component, while still near a low survey, did tick up for the first time since March, perhaps owing in part to favorable mortgage rate environment and growing expectations that home price growth will begin to moderate over the next 12 months. Lynn Franco, Senior Director of Economic Indicators at the Conference Board, said in a statement, Consumer Confidence Index also fell in August for the lowest level since February. Concerns about the Delta variant and to a lesser degree, rising gas and food prices resulted in a less favorable view of current economic conditions and short-term growth prospects, with spending intentions for homes, autos, and major appliances all somewhat cooling. March was the last time that majority of those surveyed by Fannie Mae thought it was a good time to buy. At the same time, 53% of Americans thought it was a good time to buy and only 40% thought it was a bad time. Curiously, the net share of those who thought it was a good time to sell has increased to 73% in August 2021 compared to only 48% in August 2020. In a forecast released last month, Fannie Mae economists projected that rates for 30-year fixed rates loan will rise to 3.2% by the end of next year. Lawrence Yun, the chief economist at the National Association of Realtors, said the key question raised by job report is, what will the Federal Reserve do? With the inflation rate picking up and help wanted signs at a record high, Yun expects that Fed's first act will be to taper its $120 billion in monthly purchases of treasuries and mortgage-backed securities, perhaps before the year end. That means consumer mortgages that are sold to Fannie Mae and Freddie will need to find other buyers like Wall Street, the Chinese government, and the German mutual funds. Yun said that this will lead to an uptick in mortgage rates. Moreover, the Fed will raise its short-term interest rates from 2022, which will further raise mortgage rates next year. Meanwhile, the current sky-high prices and ongoing inventory shortage led 73% of surveyees to say August was a good time to sell a home, edging down from July's 75%, but up 48% a year ago. Fannie Mae Deputy Chief Economist Mark Pillam said in a report, the continued strength of demand for housing and favorable home selling conditions may be offsetting broader concerns about the Delta variant and inflations that have negatively impacted other consumer confidence indices. U.S. home prices increased 18% in July compared to a year earlier, according to a CoreLogic report released on Tuesday. The jump is the largest 12-month gain in the index since the series began 45 years ago. On a month-over-month basis, home prices increased by 1.8% in July from June. Frank Martel, President and CEO of CoreLogic, said in a statement that home price appreciation continues to escalate as millennials entering their home buying years, renters looking to escape skyrocketing rents, and deep-pocketed investors drive demand. The rush of home buyers amid extremely low mortgage rates has caused a lack of supply, which is unlikely to be resolved over the next 5 to 10 years without more aggressive incentives for builders to add new units. Frank Northaft, chief economist at CoreLogic, said that the rate of growth is expected to slow considerably according to CoreLogic projections. By July 2022, annual home prices are projected to decrease to a 2.7% pace as ongoing affordability challenges deter some potential buyers. This price gain has far exceeded income growth and eroded affordability. In the coming months, this will taper demand and lead to a slowing in price growth. Home purchases have been seasonally adjusted, and as a realtor, I am observing slight increase in inventory. Interest rates are predicted to increase to above 3% in 2022. The Federal Reserve has no agenda of selling federally backed loans from Fannie Mae and Freddie Mac to sell until 2022 due to Delta variant. So the question is, what does a seller or a buyer do? To answer this question and any other questions you may have, please call me at 732-397-9185 or email me at rupa@ruparealtor.com. Have a nice week ahead.